The dollar's December curse hangs over markets. Will it strike again? Forecasters are flashing red. The dollar could be in for a rough December. History shows that this is the currency's weakest month as traders dump dollars to lock in gains from US assets. Now, add a possible Bank of Japan tightening and fresh economic surprises, and the dollar's recent rally could unravel fast. So is the greenback about to get coal in its Christmas stocking? Jane Foley is head of FX strategy at Rabobank. So Jane, ADP private payrolls due up and they are expected to stay stable in November. Could this complicate the Fed's next move, or will markets just shrug it off with official data set to resume?
Well, markets will watch that ADP number because that's what they've got. We won't get the official payrolls number until after the next Fed meeting. So the markets will react to the numbers on hand. That said, there is a lot of Fed easing priced in now, and more so this week than just a few days ago. So whilst the market is expecting further dollar declines, well, it is difficult necessarily to price in so much more Fed easing unless we do get an unraveling of the jobs market soon.
Further out, and Kevin Hassett is now the rumoured frontrunner for Fed chair. Should markets brace for more aggressive easing next year, and what would that mean for the dollar?
I think the market is already braced for a fairly aggressive amount of Fed easing. And yes, we know that Hassett is the favoured replacement of Fed Chair Powell in the spring, and that is likely to be announced at the start of the year. But the market has priced in a lot of easing to date, and we must assume that whoever is the next Fed Chair will remain data dependent. And that's quite interesting because right now the market, it doesn't appear to be too worried about a credibility issue. And that would be, of course, if the Trump administration was perceived by the market to be leaning heavily on the Fed to cut interest rates. As it is, Hassett and the other potential candidates for Fed chair are credible. Hassett himself, a credible economist. And from that point of view, we've got to give him the benefit of the doubt and assume that he will ease when he's got the data at hand and not because he's politically motivated to do so.
To the other side of the world now, and a Bank of Japan rate hike is now almost fully priced in for this month, but historically that sent the yen soaring and rattled the carry trade. Are traders ready for a repeat?
Well, I think the market should be a little bit concerned about that carry trade. Now, when we saw in October the leadership election of the LDP, and we saw Tahechi win that election, and then, of course, given the premiership of Japan, the market sort of assumed that she would lean on the Bank of Japan not to hike interest rates. Now, those assumptions have been turned around. It does appear now that we will get potentially an interest rate hike from the Bank of Japan in December, that they do remain data dependent. And they are seeing enough data out there to convince them to take the plunge and hike interest rates again. And that should worry those people that have put on significant yen shorts.
Well, the dollar has had a rough run recently, and some analysts see it weakening past this year's lows. Could we see a push towards a 120 against the euro?
Well, the market certainly does assume that we will see 120. And yes, it does appear that we could be in that direction. But I am unwilling to perceive that we are going to get 120 and beyond. I don't necessarily think that that is a pre-warm path, if you like, for the US dollar against the euro. The reason, well, I think the market is pretty long the euro. There was a lot of excitement about the Eurozone economy earlier on in this year with the loosening of Germany's fiscal brake. I think the market might be a little bit tired of that trade right now because growth in Germany is becoming really quite slow to really respond to that news about the loosening of the debt brake. But also, the market is no longer heavily long US dollars. We've had a huge amount of profit taking at the start of this year. The market, I think, is more flat, and I don't think we're necessarily going to be subject to the same degree of dollar decline as we saw at the start of the year.
So, Jane, Morgan Stanley just closed its bullish pound call, saying that the UK currency's run out of near-term catalysts. Is there any hope left for sterling?
Well, I think that outlook for cable is very dependent on what happens with respect to the US dollar. But with respect to sterling against the euro, I think you do get a pure idea of what's going on with respect to the pound. And we've seen the pound on a slow decline against the euro in 2025. And I think that could continue well into 2026. The market, of course, is expecting the Bank of England to potentially cut interest rates in December and then once or twice more into 2026. And I think that will keep sterling on the back foot, even without the likelihood of more ramifications about political instability within the Labour Party.
That was Jane Foley from Rabobank. Don't forget, you can watch more videos on Reuters.com.